everyone, it's Coram here. Today is Friday, December 6th, and we've got your look at the stock market today. Joining me to break down all the action from today and this week is my colleague Justin Nielsen. Justin, great to see you as always.
Great to see you as well, Allie.
Yeah. Okay. Well, we've got a lot to get to this week because it was a pretty good environment out there, especially for tech stocks, right, Justin? So, give us a little preview of what we'll be discussing today.
Yeah, it certainly does seem like it's a little bit back to the Mag 7 as a real area of strength. And we'll look at that. We'll look at the FNGS as one example when we get into the sector review. But we'll also look at some of the stocks a little bit harder to come by in terms of setups right now, with a lot of things being extended. But I thought that Broadcom looked a little interesting today. I did pick up some shares of that. Shopify is an example of one of those stocks. Big earnings gap and then a pause and maybe a second chance at that. I have a position in that as well. And Pure Storage is one I'm watching because it might be doing a similar setup. So those are the stocks for today.
Okay, we will take a look at those stocks, but first we want to take a look at the major indexes and mega cap tech stocks definitely dominated for the week. Today, the Nasdaq up 0.8%, bringing its weekly gain to about 3.3%, so a pretty healthy gain for the week. Meanwhile, the S&P 500 was up 0.25% on Friday and roughly 1% for the week, 3 weeks up in a row here. Let's take a look at small caps. The Russell 2000 actually down on the week, even with a gain of about a 0.5% on Friday, but it was an inside day. So a little bit of a slow drip here in the last couple of sessions after that big move up later in October. Or sorry, November, pardon me. And then let's take a look at the Dow as well in terms of its daily and weekly performance, down about 0.3% on the day, and then 0.6% for the week, but still nicely above a rising 10-week moving average. But like we said, really kicking off the week, it was all about tech, and it stayed that way for the entire week, Justin.
Yeah, and the Nasdaq Composite. Look, a few things to just remember. We're in a power trend. That's when on the daily chart you can see that the 21-day moving average line has been trending above that 50-day moving average line. So we've been having that in place for a while. Now we did have that test of the 21-day moving average line,
Mhm.
early in November, and then again a little, a couple weeks later. And both of those tests have been successful. Since that time, we've now had another 10 days where the low has been above that 21-day moving average line on the NASDAQ. So that's a good sign. And in market school rules, it's what we call living above the 21-day moving average line. And again, it just is the sign of a strong market. Now, I think a lot of people are probably wise to be thinking, are we getting extended? Is this too much, too fast? But when we look at our norms of what the Nasdaq does, or the Qs, um, compared to the 50-day moving average line, 6.2, yes, it's getting up there, but it's not at extremes by any stretch. So I think days like yesterday kind of help. When you have a little bit of a pause, it lets the moving average lines catch up a little bit. It lets the stocks kind of consolidate a little bit, and then you can have strong days come again. And I'm looking at 20,000. I think it's not going to
Right?
be too long before that's in the headlines.
I know. It's pretty incredible to think of how many milestones all of the major indexes have hit this year. But yeah, Nasdaq 20,000. We're just a shout away from that.
Mhm.
All right, let's also get your thoughts on the S&P 500 still in its own power trend here, Justin, above that 6,000 level, but it hasn't been as strong at least this week. So
Right.
we did get a little bit of that rotation, but it's still looking good here.
Yeah, and it's hard to kind of do that gauge when you're looking at the S&P 500, because you look at the relative strength line and it's flat because of course it's compared to the S&P 500. But when you look at the Nasdaq, one of the things to observe is, okay, look, the S&P 500 versus the Nasdaq, you can see how strong this relative strength line is, which means, you know by definition, that means that the S&P 500, if it were compared
Mhm.
against the Nasdaq, would be going down. So back to the S&P 500, as you mentioned, it's not doing anything wrong. It's just not as powerful. Simply put, it's still trending above its 21-day moving average line. It's still holding all the levels that you'd want to see. It got above 6,000, kind of tested it, at first, and then hovered around there, and it's making progress above 6,000. So not doing anything wrong
Yeah.
by any stretch. But when we look at RSP, which is the equal weighted S&P 500, that does give us a little insight as to, okay, well, this has not been nearly as strong. I mean, we've been going back and forth on how the Mag 7, the trillion-dollar companies, can really have a significant impact on these indexes because they're such a big part of the weighting in these indexes. And RSP is showing you that, hey, it's not that everyone's participating right now. There has been a little bit of a pullback, and so you might be seeing that in your individual stocks. Hey, there is kind of a pullback going on in some areas, and RSP, I mean, it actually undercut yesterday's lows. It's been making lower lows here
Yeah.
for most of this week. So a very different picture. Again, not doing anything wrong. Still above the 21-day moving average line. No reason to hit your panic button, but
Yeah.
it's worth considering, especially if you're looking at your portfolio and saying, hey, why am I underperforming a little bit? You might look and
Mhm.
see, okay, am I in the right spaces of
Right.
what's working right now?
Exactly, yeah, it just helps with that stock selection, aspect of things.
Mhm.
Okay, let's now take a quick look at small caps. What are you seeing here, Justin?
I just throw up my hands on Russell 2000 because this is, teased me so many times.
Yep.
I like how strong it was. I mean, look, I liked how strong it was in July. I
Yeah,
got, I thought that this was the one that was going to work, and it did for a
few
week.
days, yeah.
Yeah,
I guess
so
you gotta swing trade this one, I
yeah,
guess, you know,
and
with
then
those
but
terms.
when it came down so dramatically, and
Yeah.
the same thing kind of happened here. It really had kind of a few days of a move, came down very sharply. Now you could say, oh, well, it got support at the 21-day moving average line and right at the top of the base at 228. All of those are good things. And then you really had that power come back. Fooled me again. I was, thinking, okay, this is it. And now here we are drifting lower. You can see that the relative strength line is just not looking that powerful compared to the S&P 500. So, for me, I, I've tried it. I've tried it a
Mhm.
couple times. I might try it again, but right now, I threw the towel in on this one.
Yeah, I mean, I do think it's great to see it making higher highs and higher lows, but it's a pretty volatile ride
Yeah.
getting there, so
And
gotta know that.
just looking at the MDY, which is the S&P 400 mid cap index, it's notable that whereas the Russell 2000 did kind of stay inside yesterday's range, it didn't undercut yesterday's low. MDY, like RSP, did undercut the low. Now it's right at the top of a level that you'd like to see it get support,
Mhm.
but again, this was looking so strong. I'd say it's a little bit stronger than the Russell 2000, but
Right.
still it's kind of in a at a crossroads.
Yeah, exactly. And I mean, we do talk a lot about trying to catch a reversal versus waiting for new
Yeah.
highs. So that can be helpful as well. But I think as long as it holds the 21-day line, I know you and Webby talk a lot about 50% retracements and what's normal and abnormal. These are clearly just eyeballed here. But, roughly around that 21-day line, if it can bounce again from there, if you're going to try it, it feels like that's the time to do it.
Yeah, and we had Anne-Marie Band on the podcast, and that's the big thing that she looks at. She looks at those ranges. I mean, you know this, Allie, because you've marked up her charts for her. She's so big into looking at those ranges and kind of understanding where it could come down into. And sometimes when you're in an overall uptrend, it's okay to buy on those pullbacks because it just kind
Mhm.
of gets you reversals. It lets you kind of minimize your risk. There's a lot of benefits to buying on the pullbacks as opposed to the breakouts in some situations.
Absolutely. Okay, next on the list, it was a notable week for crypto. Full disclosure, I do own the IBIT ETF, up about 4.7% today. And Bitcoin itself closing this week. It trades 24 hours though, right?
Right,
So
right, right. So closing,
closing, it's currently trading rather
and for those of
at
you listening, you probably heard her air quotes.
yeah, second time this week, right, Justin? Yeah, it's above 100,000
Yeah.
Bitcoin itself, $100,000 per coin. So that's sort of the notable headline here this week.
Mhm. And look, it hasn't been easy. I mean, when you look at the
No.
daily chart, yesterday was not great, right? You know, you had this move up,
Mhm.
move to high ground, and then reversed, closed at the lows, closed down, gave up all of those gains. And then today, it's a little hard for me to know what to make of it today. I mean, it's an
Yeah.
inside day. It did close at the top of its range. It kind of closed above that area that you'd like to see it. You know, I mean, it's getting support where you'd like it to. But yesterday was kind of a weird one, and it did get it did get up there, but I like how it did kind of hold the majority of those gains, still trending above the 21-day moving average line.
Yeah,
I don't blame you for holding it,
exactly.
Allie.
Yeah. 21-day line, I think that's definitely, one of the levels that I'm keeping a very close eye on. It's about 11% above that level. I mean, if it goes down there in one day, I mean, that's not going to look great. But other than that, I mean, between that guardrail on the daily and then hey, let's see if the 10-week line can catch up because
Hmm.
back to that concept of normal versus abnormal, what seemingly would be normal at this point would be for it to pause and digest and let those moving averages catch up ideally. So we'll have to see what happens. I know that there are crypto bulls out there who are seeing the shifting regulatory
Yeah,
environment and just more mass support for crypto in addition to this key round number as signals for hey, there could be more buyers coming. But as active investors, we just have to be careful about where we're getting in. So
absolutely.
it's
Yeah.
kind of extended here.
Hmm.
All right.
And
Move
to your
Go
point
ahead.
there, I
Go
mean,
ahead.
it's when you get in and you get a cushion,
Yeah.
and then you can give it the room that it needs. And look, Bitcoin moves.
Exactly.
It's
I was about to
so
say, yeah. No,
getting a cushion is critical.
yeah, knowing what you own, yeah, this is a wild one. This is a wild
Mhm.
one. So yeah, you gotta be aware of those wiggles and wobbles. Okay, so Justin, you mentioned that this week the FANG type stocks led, let's put that in percentage terms, up 1% today, 6% for the week. So money flowing back to the mega cap techs in a notable way this week. I mean, whether you're looking at Meta or Amazon, Apple, some of these other big names had impressive weeks, even Tesla, full disclosure, I own this one too. I think, are you in Tesla?
I am. Yeah.
Justin, yeah, so a number of us own this one as well. Surprisingly, though, or maybe not surprisingly, NVIDIA, it didn't really have a huge week, but it is finding support at a key long-term level. But again, in general, it really was very clear where the money was flowing this week, Justin.
Yeah, and I do, and I think you do as well, have a position in Nvidia. So yeah, it's a little disappointing when you see for a while there, it seemed like as Nvidia goes, so goes the market, and there is a little bit of a disconnect there right now. And when we get into the stocks, we'll talk a little bit more about that. But again, not doing anything wrong, but
Mhm.
sometimes you have to look and say, okay, is this one potentially going to sit out
Right.
for a little bit? Is this where the money is flowing to right now, or are there better places for it?
Yeah, and I think a part of the decision there in terms of holding it has to do a lot with Justin. You always say, "Well, where did you get in?"
Yeah.
Because nothing that you own is going to go up every day, and it does happen where you could be in a leading stock that, in the short run is underperforming, and you have to make that decision. Are you willing to stick with it and go through some sort of digestion or base building period or underperformance or rotate money elsewhere? So those can be
Yeah.
some tricky decisions that investors need to
Yeah.
make.
Absolutely, that where you got in makes such a difference. I mean, we had Viva on the show on IBD Live today, and she got in 2016. It's going to take a while for her to be even phased by
Yeah. Yeah.
by a downside move in Nvidia.
Exactly. Yeah, that was a really great episode with Viva Jha, three-time top female performer in the US Investing Championship. So check that recording out. Lots of great, great nuggets. Okay, a couple of other quick ETFs here, Justin. Let's try to breeze through these. Software, because if tech is up, software
Hmm.
having a good week, up
Yeah.
5%. So that was a good week here for software.
A lot of the computer software enterprise stocks. And you know what? I'll also
A
go
lot of
ahead and add
earnings.
on to that cyber,
Hmm.
CIBR. A lot of the computer software security stocks having a nice run, kind of breaking out of a little area for a lot of those stocks. So I thought that was interesting.
Yeah, and underneath the surface, there were a lot of software earnings this week, so
Yes. Mhm.
that
Earning
definitely
season's
helped.
not over yet, as we learned.
Yeah, we've got a lot of retail stuff next week, I think.
uh Yeah.
Okay,
Hmm.
let's, oop, finger fumbled there. Jets, airlines also had a nice week, Justin. Jets
Yeah,
up
a lot of
4%.
travel. A lot of travel. There were some positive analyst comments, positive guidance for some of the big airlines. We're seeing a lot of these little short bases in some stocks and ETFs. They're not long enough to be a cup with handle officially, but they have that kind of look, and that's what we saw from Jets this week. You've got a number of hotels that are also looking interesting. The cruise lines still holding up. So yeah, this is
Mhm.
an area of travel that
Yeah.
is still worth keeping an eye on. I will mention that a few areas that I'm a little hesitant to go into, things like trip.com, TCOM, TCOM. There's still kind of that China, like I'm just not sure. It's yes, it's travel, but and it looks good, it looks set up, but with the China exposure, I'm a little unsure on.
Mhm. Yeah. And I just had pulled up the OOTO out of the
Yeah.
office. I love that ticker. This is a 2X ETF that tracks a travel and vacation index. So beyond just the airlines, it also has some of those other stocks in the travel theme as well. This one has run away, wishing
Yeah.
I would have been a buyer when it got back above the 200-day line or even at the breakout, Justin. But one thing's for sure, we've seen a lot of momentum in the travel stocks. And cruise line's a really great example of that.
Yeah, but that's one of the things is you have to recognize that in a strong market, there are a lot of
Yeah,
opportunities, and you can't take them all. So
you can't.
you just have to kind of go with the ones that you have, nurture those, and hopefully they grow up into be rock stars.
Let's take a look at KRE regional banks sitting out this week, Justin, down 1.7% on the week.
Yeah, but you know what? One of the things that I am kind of just I as much as it's not like a panic or anything like that where we've gotten really extended, I'm still on the lookout for if there's a sector rotation, where could that be? And so
Mm,
KRE is one of those areas I'm looking at because nice support right there at the 21-day moving average line, a little bit of a pullback. So yes, weak this week. Just like IWM and MDY and all of those, but uh, that support of the 21-day moving average line did intrigue me. So if that's something that can maybe take a stand here, and if we see some pullbacks in the tech space, this might be an
mm,
area to get a swing trade out of rather than wait for the breakout.
right?
Getting it at the reversal, maybe you get a swing trade out of this.
Yes, good point there. And one last ticker to take a look at before we pivot to those three stocks, and that is the 10-year yield, which we have seen a shift in the picture here, Justin, in recent weeks, with today being somewhat of an exclamation point, one
Yeah,
might argue. So now down 3 weeks in a row and officially closing below some key technical levels here. We do have another Fed meeting coming up, and it seems like, with the jobs report out today, it does seem like the odds of another rate cut are going up.
yeah, and those odds have been all over the place. There's been a lot of, I think, uncertainty, but as you said, it's definitely going up now. That the odds of the rate, I think last time I looked at it was like 88% odds for a quarter point cut. So yeah, that's definitely gone up, and it's it's weird because some of the correlations that we typically rely on, oh, when it's going up, that's bad for stocks, and when it's going down, it's good for stocks, especially the small cap index as well. It's going down, and the small caps aren't
Mm,
participating.
mhm.
Some of these correlations are just not holding true right now. But I still think it's worth keeping your eye on this just to kind of understand one of the backdrops that
Right,
the market
exactly.
is dealing with. It's one of those variables that's very
Mhm.
important.
Yeah, exactly, that step back, okay, what is happening? We know what was happening generally speaking in the rate hike environment, then
Yeah.
when the pause happened, and now in this rate cut, type moment here, like you said, it's not gonna be a one-to-one correlation every single day,
Right.
but good to keep in mind, with that backdrop there, and we
And
will keep track of it.
if I'm going to be choosing one, I'm going to choose the stock charts, the market charts over, this is again something that is providing context,
Yep,
but at the end of the day, I'm going to look at the charts because that's where people are, making their bets, making their money decisions,
right.
and that's going to tell me a lot more uh,
Mhm.
on its own than the
Yeah.
10-year treasury yield.
Oh, exactly. Yeah, that's what should be driving our decisions as well for buys and sells, looking at those specific charts. Totally
Absolutely.
agree. Okay, well, speaking of, let's take a look at three notable stock movers, starting with Broadcom, up 5.3% and above average volume today. It's got earnings coming up next week, but a powerful move back above that 50-day line, Justin.
And I know you're a big fan of those stocks that go through the 50-day moving average line, but it's a little bit tough because we are still, earnings are around the corner. So that does make it tougher. But,
Right.
we were talking about NVIDIA earlier. And if you look at TSM,
Mhm.
just to kind of get a sense of some of the other leaders in this group,
Right.
TSM, this is looking very strong. It got back above its 50-day moving average line with some gusto and is really holding up well, got back above 200. ALAB, a little bit more speculative, a little bit more squirrely. I do have a position in A Lab as well. This has been just getting support right there at the 10-day moving average line, looking really strong. And so then you look at Nvidia, which has been the big daddy of them all, where a lot of times why not just buy Nvidia was our mantra for a while. This one is it's just a little lackluster comparatively. So I think Broadcom is definitely one to watch. It has a lot of things going for it. You could kind of look at this as either like a little double bottom,
Yeah.
or again, sometimes we use kind of this shakeout plus three rule. And that's where you take the 167 area, you look at, okay, when you shake out and then come back above that by 3 points. Now that's for a $30 stock. So let's say add
5%?
yeah, or we could add like 16, let's say we add 16 or something like that to it. That would be
10%?
what? Yeah,
So you use
183. So we're
10%?
right
Yeah.
there. We're right there at a level where that shakeout plus three would be. And again, that's using 10%. If you used a little bit less, then you would be basically in it today.
Mm,
So that does make this a potential entry. But again, you've got the earnings coming up. That is a risk. Maybe you get the cushion ahead of time.
mhm.
That's what I was kind of going for. Hopefully, I can get
Yeah.
cushion before the earnings because I
Yeah,
did
you can
just buy
always
it today.
see. You can always sell it,
Yeah,
you know?
exactly. Yeah. So I
Yeah.
mean, look, what's the harm? And
We're
so
we are in a raging bull market after all.
exactly.
So,
So and look, I don't need that much cushion, right? If I get 5% or 10% in a week, well,
mhm.
that hasn't been unusual for a lot of stocks in the past few weeks.
Yeah. Okay, thanks for that, Justin. Let's take a look at Shopify, a breakout of a long base on its earnings report earlier in November. That gap up on the day, up about 21%, a little bit of an undercut of that gap up day low, tagged the 10-day moving average, some early entries within there on the bounce, and now getting above the highs around 115 from the last couple of weeks.
Yeah, I mean, this is again one of those mini little cup with handles that we're seeing. We're seeing a lot of these, and a lot of them after gap ups on earnings or from the post-election bump that we saw in a lot of stocks. So this is just a pattern I keep on seeing over and over. In fact, I wrote an article today on Bros. If you just pull that up real quick, it kind of had a similar. This is Dutch Brothers. Had a kind of a
Mhm.
similar. Okay, big gap up, a little pause, breaks out and then really starts moving. So that's what I'm kind of looking at here with
Hmm.
Shopify. I do have a position in this. We put it on Swing Trader today. There's a lot of stocks that kind of have this look. I like when it can make those big gains on an earnings report where everyone's kind of saying, hey, with this new information, we have to revalue this company. And
Hmm.
it's able to hold those gains, which Shopify so
Right.
far has been able to do. And this week, it's actually been adding
Hmm.
to those gains. I would also add that it's interesting that there's a lot of these former stars that kind of dropped off our radar
Yep.
for a while that really seem to be coming back. I mean, DocuSign today, we all remember that from the COVID,
Hmm.
era. It
Yeah.
had a huge move. Square coming back. We've even got PayPal and Affirm that's already come back. Carvana. I do have a position in Carvana that already is almost at new highs. Upstart. The list goes on. Zoom,
Yeah.
Peloton. You know, the list is just a lot of these are on the comeback trail. So Shopify,
A
kind of
broadening out. Hmm.
fits that character, and it is in that computer software enterprise area, which, as we saw from IGV, seems like it's getting a little bit of a bump.
Yep. All right. Justin, you know what? I think it also shows the fact that this is an actionable area right here with this mini cup with handle just shows you the kind of strong environment that we're in. That it is an environment where you can take more calculated
Mhm.
risks versus being in an environment where you're going to be super selective and making sure it's right at the 50-day. I mean, hey, even better in my book if you can do that in a strong market too. But I think these more aggressive entry points in these shorter consolidations, they've worked, right?
Yeah.
They're not all going to work,
Mhm.
but the fact that we're discussing these types of things, I think just shows you the kind of market that we're in.
Yeah, and to be fair, there are a lot of areas. I mean, we always concentrate on the strength, right? We're glass half full people, but there are some areas that have been a little bit trickier, and that goes without saying that you want to be recognizing when things aren't working and start looking at, okay, are there other areas that are working? How do I get my money into those?
Mhm. Exactly. Okay, let's also take a look at PSTG. This is Pure Storage, a gap up on earnings this week, and speaks to that data storage, software, earnings mover kind of situation that we have been talking about unfolded this week.
Yes, and so this is one that I have on my radar. Just as I've seen a lot of these big gap ups hold very nicely and then make gains from there, I'm looking at this as possibly an opportunity. So one for my radar,
Mhm.
that I'm watching very closely. Again, one of the tricky parts right now is that, I mean, I'm kind of full, right? It's hard to, unless something else starts breaking down. It's going to be hard for me to add anything. But a lot of times these gap ups, they can do this kind of squiggly action, and it might it might seem like, oh, okay, well, as long as it holds the gap up low, I'm fine. But if you bought at the peak, all the way down to the gap up below, that could be 10% very easily. So, what I like about some of these alternative entries is it gives you a way to kind of move that stop up. So you're taking
Mm,
less risk. And that can be a very, very helpful piece to get you a sizable position without having to take on this undue risk to your portfolio.
yeah. Well, that makes a lot of sense. Okay, Justin. Webby is not here, but it is Friday. So, in honor of Webby, we have some regression channels that we want to share with the audience just to give some added context about where we are in this strong market. It's been a big week, especially we talked about QQQ, the big gain that it had on a weekly basis. So, with that, and the fact that we're in a power trend, we need to be aware of okay, well, how much further can we go before we really need to be careful about adding exposure or to start thinking about locking in gains. So, what do these charts show us?
Yeah. And so a shout out to Webby because here he is on his vacation day. And I'm like, he was doing all this stuff in the background anyway, and I'm like, well, since you're doing stuff, you mind,
Yeah. While you're at it.
yeah, right, exactly. So he shared these with me just a few minutes before the close. And again, if you are remembering that we have a 0.75 on the downside for this
Mhm.
green dashed line, a full standard deviation, one standard deviation lower on the solid green, full standard deviation on the upside on the red, and then a half a standard deviation above this white regression right here. That's just a best fit line. So this, we were Webby was really kind of pounding the table on how this was the time to be aggressive when we did get that support right there at the green solid line,
Mhm.
and it
Day before the
immediately
election,
yes, exactly. That
just
that was
like
that was the tough part. That was the tough part, but you immediately
Yeah.
got up to the dashed red
Mhm.
line and pulled back. You know what? That's very, very normal. And so when we did that again, that was kind of a little bit of an expectation. Bless you. That was a little bit of an expectation there where we, thought that maybe we would come in maybe to this white regression line again. But today, the fact that we got back above the highs of yesterday might mean that we're on tap for this to go to this solid red line. So that's something that we're looking at as a potential. Look, we could still pull back to this white line, even pull back to the green line, the dashed green line, and still be very normal. But with that move today, kind of breaking the expectation, a positive expectation breaker, we could be looking at that. Getting up to that solid red line. Now, if we look at the Qs, a little, not as strong as the NASDAQ in terms of where it is relative to its regression line. But the fact that this was kind of hugging that regression line, popped above its highs today, this is something that you would expect to go to at least the red dashed line. So we would expect to get a little bit more out of this. Um, the FNGS. Look, this is above that that solid red line. And Allie was, as we were going through charts, she's like, "Wait a minute, this looks different," and she immediately keyed in on this. Isn't what the regression lines look like. We haven't been showing this one as much, but look, sometimes when you get above that line. When you come up to it and then get turned away, that's one thing. But
Yeah,
when you come up to it and then
and live above it.
live above it. Now that's where you might have another opportunity for some greater gain. So that's something to be aware of here. Um, SPY, as we noted, a little bit weaker. It's just kind of hugging in between the white dash line and the green dash line. So not doing anything wrong, but also just not showing the kind of power that we're seeing from FNGS, the Qs,
Mhm.
and the Nasdaq. And then of course you have MDY, which kind of strange how this was getting above its, red solid line, but instead of holding above it, it's now dove back beneath it. And so we may have to be looking for MDY and IWM at maybe some new trends because once you get once you break a trend and spend a few days below it, you kind of have to reset things. This might be, remains to be seen. Once you get above a trend and stay above it for long enough, you might have to reset that. So that's something that I think once we have a few more data points, Webby will have an update on that for you next Friday.
Yeah. All right. Well, that is great. Thank you so much for that, Justin. Let's end with a little bit of homework. This is something that I was starting to play around with this week, and I'm gonna do another look back at it over the weekend, and that's to do a change date to October 29th, 1999. And it's not going to be, again, a one to one analog to what we're seeing. But we've been talking about how we are in this 1999 type of environment. Instead of the internet, we've got AI. And so, and a lot of considerable tailwinds. And the market is telling us to be in a bullish mode, right? We've seen all of these stocks that have made incredible moves. So I think going day by day in real time, looking at how that move in 1999 unfolded on the index level, is just interesting, right?
Hmm.
I'm not trying to manifest that or anything. Um, maybe I am, but it was just really interesting to look at how that move unfolded and think about, oh well, what would I do on
Hmm.
this day? So
Yeah.
pretty interesting.
And I would add one thing to that. pay attention to some of those percentage changes, because
Yeah.
when you look at a chart, especially when you see, oh well, it was just running, if you look at a weekly chart or a monthly chart and you're like, oh, it was, that must have been so easy because it was just running so much. You got to remember some of those intraday moves were enough to
Mm,
really kind of test your mettle,
yeah,
especially
especially
if you're
towards the
thinking.
end there.
Yes, exactly. So you're thinking, oh, are we getting extended? Is this getting too much? Am I seeing downside reversals? Am I seeing climax tops? All of these things kind of had you a little on edge
Mhm,
as we were seeing, some of these moves down, and you could very easily, I mean, 2% was kind of like a nothing day on the NASDAQ back
mm,
then. And
mm.
think of what that was doing to your individual stocks. That's the index. For individual stocks, it was even worse. And so just put that perspective in mind as you're doing that day by day. Remember
Mm,
what the percentages were there, because it might not be, it wasn't as easy as it seemed when you look at the chart sometimes because of that
yeah.
extra volatility.
Oh, exactly. Totally, totally agree. Not that I was trading in 1999, but I could imagine.
We're not going
And
to ask how old you were.
anything else to add, Justin?
No, I just hope everyone has a great weekend. And again, it's the power trend is on. There's a lot of reasons to be bullish, but that doesn't mean you get complacent.
Yeah,
So you have to
can
still be
change in a
looking
moment.
at your. Mhm. You have to be looking at your individual stocks, making sure you're in the right areas, making sure that your stocks are holding up, and beyond that, enjoy the ride. Take
All
care.
right. Well, thank you so much, Justin, for all the insights today. We missed Webby, but this was great. So thanks again to Justin. And thanks everyone for tuning in. That is it from us for this week. And like Justin said, we hope everyone has a great weekend. But we'll be back Monday morning with the IBD Live, investors.com/IBD Live for all the details on that. And then, of course, we'll see you back here on Monday, right here after the close. So we'll see you then.